So there will be no single dose of panaceas to save the economy or to rescue the economy right now, but it requires a lot of coordinations from different parts of the policymakers. I'm afraid currently the expectations in the market from both supply and demand side have reached a consensus, which is that China's property market, the mechanism has completely changed.
China's central bank has unveiled its biggest stimulus package since the COVID-19 pandemic. It's aimed at kickstarting the country's stuttering economy. Growth has slowed to its worst pace in 5 quarters. Now, the measures include a cut to the reserve requirement ratio, which dictates the amount of cash banks must hold in reserve. Beijing will also lower the interest rates of existing mortgage loans and ease the rules for second home purchases. It will create as well a swap program allowing firms to acquire liquidity from the central bank. This all aimed at making it easier to access funds to buy stocks. Now, this is because the world's second largest economy looks on track to miss its 5% growth target this year. So markets had hoped for stimulus. To put this into context for us, I'm joined by Betty Wang, lead economist at Oxford Economics. Thanks for joining us, Betty. These measures are being described as a stimulus blitz. Do you think these measures will be enough to get the overall economy growing again?
Well, I think at least it's heading towards the right direction, and also it suggests that the policymakers are aware of the weakness in the economy, and as you said, that it could risk the possibility of missing growth target by the end of this year. But of course, if the policy impact will be sufficient enough to show up the growth, will also depend on a few factors. For example, if there will be a continuous policy support from the central bank, and also if there's a coordination from other parts of the regulators and policymakers, for example, fiscal policies, whether there will be more stimulus from the fiscal side and the property market, if there will be a continuous support from the property market. So there will be no single dose of panaceas to save the economy or to rescue the economy right now, but it requires a lot of coordinations from different parts of the policymakers.
Was this move a surprise? Had it been expected?
Well, I think to some extent the market had expected some sort of easing, including us, for example, policy rate cut. But in terms of the extent and also the timing, it was actually I think it was out of expectations. For example, we were expecting a 10 basis point policy rate cut in Q4, and obviously it came earlier than we had expected at a larger extent. And also, this is the first time since the pandemic that the PBOC, the Central Bank of China, offered a big full basket of policy support, including cuts in policy rates, reserve requirement ratios, as well as adjustment to the structural monetary policy to support both property market as well as stock market. Yes, it is a surprise.
Yeah, speaking of the property market, it's still flagging. Will this mortgage rate cut help?
I think it will help to some extent because the one sort of problem that has been discussing for the past couple of years or so is the differentials between the interest rates of existing and new mortgages. So I think the policy move this time addressed part of the problem, and also to align the down payment ratio of a first and second home purchases. That could also help some, even home buyers who are looking for some upgrade of their existing homes. But once again, I think we'll need further support from both supply and demand side, not only to to adjust this mortgage lending, but also to provide continuous liquidity to the property developers, as well as to lift the consumer sentiment.
Now, the PBOC said it will provide 100% of the bank loans for buying unsold property, what local governments are going to buy when they can't make enough money to repay the loans or even service them, as rental yields are lower than interest rates. Could this be helpful?
I think it will, once again, to some extent, but I'm afraid currently the expectations in the market from both supply and demand side have reached a consensus, which is that China's like property market, the mechanism has completely changed. So it's there will be no such a sort of strong rebound or recovery, or even the booming time, or the cycle repeats in the property markets in the coming like years, as Chinese government is quite determined to re-navigate the property sector from a pure market-led market to a both the market-driven as well as the state-led sort of housing supply. So that is something that I'm afraid cannot be changed anytime soon.
Lastly, the central bank also announced $71 billion of liquidity support for stocks. Markets were lifted by all of this news. Is there likely to be a short-term bump?
Well, I mean, if you look at the market reaction right after the policy announcement, not only from the stock market, but also the FX market, I think it suggests that it lifted sentiment, at least in the short term. And also, as we said earlier, it was, I think what it offered by the PBOC has been larger than, or more bolder than the market has expected. So that's a good thing. But we need to see a continuous support and in a coordinated way from all different parts of policymakers. I think that will be quite important to bear in mind.
Betty Wang, lead economist at Oxford Economics. Thank you for joining us from Singapore.